Everybody, it is pre-market. I hope you're having a good day. March 31st, last day of the quarter, and let's just dive right into it, right? Market is doing what the market does. We're up a little bit this morning. We're going to talk about the stocks that are in breakout mode versus breakdown mode. We'll talk about futures and ongoing concerns about the war. All right, let's do it. Futures are up this morning, 1%. The IRGC saying that Hormuz is theirs. Futures adding 1%. Trump saying he's willing to end the war without reopening Hormuz. We'll see what happens there. But the IRGC immediately said it is under their control of the soldiers, and any movement will be hit with missiles. Overnight, U.S. dropped bunker busters on Isfahan. Israel struck Tehran and the Caspian Sea sites. Iran hit a Kuwaiti tanker near Dubai. Saudi intercepted 10 drones and a power outage in East Tehran. Iran's desalination plant in Caspian Island was destroyed. Oil pulling back from overnight highs, but is still elevated. WTI sitting at 103, Brent at 107. We'll talk about what's going on with Omani crude as well. And the tech sector death crossed yesterday. This is the worst quarter in 4 years. And once again, this is a reminder that we are on the backside of the liquidity cycle. If you've been following us, we've been talking about this and the likelihood that this weakness will persist, that we're going to see lower highs and lower lows along the way, coming on the backside of the peak of that cycle, according to the Global Liquidity Index by Cross-Border Capital, back at the end of the third quarter. This morning, however, the market wants to believe in de-escalation. The VIX fell to 26.75, and Goldman has an update on gold. You can see across the board 64.50 roughly right now on the S&P 500, the Dow at 45,926. Gold 46.08. Goldman raising its price target to about 5,400 by year end. I'm on board with that. I just continue to advocate that you sell spreads to the downside on miners, and you look to try to take advantage if the stocks do pull back. Those companies like Wheaton or any of the royalty companies like Franco-Nevada, you sell spreads. You look for about an 80% probability of profit, a 20% return, and you're willing to take delivery of that stock. However, if the stock moves higher or trades sideways, the value of that contract will go down. You could buy it back. Simple way to make money on that. The dollar at 125. Obviously, we're keeping a close eye on that. There is a dollar shortage internationally right now as nations scramble to obtain dollars to then turn around and get access to oil that is priced in dollars. Bitcoin at 66.8. All right, so we dropped bunker busters last night, 2,000-pound penetrator munitions. Israel struck military sites near the Caspian Sea. Trump has threatened to blow up electricity plants, oil facilities, and possibly desalination infrastructure if Iran doesn't open up the strait. They said he'd be willing to end the hostilities even if Hormuz stays shut. Iran's parliament has approved tolls on ships transiting the Strait of Hormuz, and Italy denied the United States use of a naval base, Russia warning that the crisis could spill over into a wider conflict. WTI at 103, Brent at 107.59. Omani OSP oil has effectively doubled now since the start. The Realtel Oman's crude official selling price for May nearly doubled from April, 124.05 against that $68 level that we saw back earlier this month, February. That's the physical market saying this is not going away. And again, we are deeply concerned about the infrastructure in the region. It's going to take a very long time to rebuild and reopen this. That is why we're keeping such a close eye on the midstream here in the United States. Once again, shipping companies that are moving things through pipelines, things that are being stored. Kinder Morgan is a perfect example. Once again, the IRGC saying that Hormuz is fully under their control and any movement will be hit with missiles and drones. The markets, of course, want to believe in peace, but the physical market for crude is pricing for war. The tech death cross yesterday. This is the fifth consecutive losing month in the tech sector, and it's not shocking given the fact that we are on the backside of the liquidity cycle. Higher beta stocks, all of the stocks that are tied up in the Mag 7, all of those AI names, all under pressure. The sector's 50-day moving average crossed below its 200-day moving average on Monday. That is what is considered the death cross. The last time we had 5 consecutive losing months, that was September 2022. You will recall something broke. It was the British economy. The British economy experiencing the gilt crisis. That was where we were seeing pension systems dumping bonds, leading to higher yields, leading to more forced selling, and it created a spiral where ultimately the Bank of England was raising rates at the beginning of a week and printing money the following Friday. So we have to just pay very close attention to the fact that if something breaks in credit, we are likely going to see some sort of monetary accommodation at some point. This is the worst quarter for U.S. stocks in nearly 4 years. Once again, very significant similarities to 2022 on the backside of that cycle. It was supposed to be a banner year for Wall Street. We had people coming out saying, we're going to 7,200. We're going to 8,000. Well, now investors are just hoping to avoid a global recession triggered by this massive run-up in energy prices. Recession odds still remain high. Goldman saying 30%, Moody's at 48.6. Pull that number out of a hat. And Wilmington Trust at 45. All right. Now, Jerome Powell has said there is little chance of contagion in private credit, and I will be the judge of that. Inflation pressures appeared contained for now. No immediate need for further hikes, said Powell. Little chance of contagion in private credit markets. The Fed is not coming to the rescue, is effectively what he is telling everybody. No cuts, no right hikes. You're on your own, everybody. He's going to ride off on a horse into the sunset. The BIS, however, Bank for International Settlements, says otherwise. Powell says no contagion, but the BIS report from August said banks are warehousing leveraged loans and hoping to offload them before conditions change. Ares had capped their redemptions at 5% after withdrawals hit 11.6. Apollo did the same. Blue Owl, Cliffwater, Morgan Stanley's. Again, all of these things are concerns. Morgan Stanley's saying that default rates could hit 8%. So when the Fed chair says there's little chance of contagion, that's where you start looking for contagion. On the momentum side, just going to briefly point this out. This is what our money printer elite have access to. These are all of the momentum stocks ranked. And this is the top of the board: Apache, Dell, CF Industries, Devon, Archer Daniels, Phillips. What is it telling us? Supply concerns in oil, food, fertilizer, downstream refineries, upstream oil and gas. Halliburton joining the list as well. On the downside, MasterCard, Visa, Berkshire Hathaway, International Exchange, ICE. We just saw a significant insider buy from CME Group today, but look at these names as well. It's all telling us the same thing. Concerns around the consumer, concerns around debt, and I want to stress something. Somebody sent me a note last night, and they said, you do realize that all of the stocks that are breaking down are up today. Yes, zoom out and look at the chart over the month. One day does not make the market. And I continue to just advocate when we get some level of monetary support, these are the things I'm going to buy. MasterCard and Visa and Berkshire and their huge moats. That's where I want to ultimately be. But for right now, we are in the process of lower highs and lower lows. If momentum returns to the market, yes, that's fine. But financials are paying for this war. Berkshire Hathaway's chart looks very gnarly. That said, I am a long-term holder of Berkshire Hathaway and a very long-term holder of Visa. 3 things to watch today. WTI again spiking after that tanker was struck near Dubai. If Brent opens above 120 this week, well, the S&P is likely going to continue to correct. We have to keep an eye on oil prices. SocGen saying that 150 is on the table. The tanker strike changes the risk calculus overnight. March consumer confidence is coming out this morning. So is the February JOLTS data. Both will tell us whether the labor market is holding or cracking. Moody's has the recession rate odds at 48.6, Goldman at 30. And the data today either confirms or denies those recession calls. And of course, Nike will be reporting earnings. Hey, we got 3 shows. We got a lot going on here. Morning Brrr, this is your free show. After that, I will record me and the money printers for Money Printer Pro. So we do a deep dive. We'll cover the BIS. We'll talk about the stuff that nobody wants to read. And on top of that, once again, today, releasing me and the Money Printer. Money Printer Pro comes out right before the bell as well, including the breakout stocks, the breakdown names, and our reader, which you can access 24 hours a day at moneyprinterpro.com. All right, everybody, I'm going to wrap it up. I hope you all have a great trading day. Any questions, of course, just put it in the comments section, and we will go from there. Stay positive.